Hi, I am Anna. I come from www.ntvforex.com. Traders refocus on FOMC policy analysis. http ntvforex.com News ID 3DC0B6 7/30/2025 56:15 a.m. Before placing bets, the traders are waiting for the Federal Open Market Committee meeting outcome. The Fed policy comes at a difficult time for the U.S. economy. The U.S. economy is still grappled with rising coronavirus cases and has to deal with the impact of the pandemic. The number of COVID-19 cases is rising and many states have scaled back their reopening plans. So the reality is that the U.S.'s economy is going through a roller coaster ride and is still facing a very uncertain economic environment. Eventually, the nation will realize how big a bite the pandemic had knocked the economy. But until then, both the fiscal and the monetary authorities will have to do whatever it takes to keep the economy churning. So far, the Fed's aggressiveness in easing financial conditions have also succeeded in halting a further decline in the U.S. economy. All this while, the U.S. administration was expected to double down its fiscal stimulus measures. The hopes of an increase in stimulus packages was keeping the gold prices higher, and MCX gold breached all-time high of 52,750 and is currently hovering around 52,570. While dollar index sharply slumped to a two-year low of 93.47. However, the rally in gold paused and profit booking was observed after Trump said that he did not support everything in a $1 trillion Senate Republican coronavirus relief proposal. On the other hand, dollar index gained grounds as Federal Open Market Committee began its two-day monetary policy. Whilst the rally in the precious metal is pausing for breath, there are doubts whether it has reached a peak. Today, we expect the Fed to keep Fed fund rate near 0.25% and the accompanying monetary policy statement to be relatively dovish considering that the number of coronavirus cases is rising. Fed Chair Powell will reiterate that the central bank will demonstrate whatever it takes, beyond interest rate cuts and asset buying, to restore financial market stability, smooth out U.S. dollar funding conditions and safeguard the economy. As seen in the following chart, the inverse relationship between gold and dollar will continue. The expectations of a dovish Fed, willing to see inflation pass its target before rates will rise, will potentially add more pressure to the U.S. dollar. A weak greenback is gold positive, making it cheaper for international buyers. MCX gold has been consistently breaching all the key resistances due to ongoing mixed sentiments. Investors traders playing cautiously, keeping gold's safe haven card in hand. However, RSI at hovering around 86.7, which indicates overbought position in gold, and hence we expect the yellow metal prices to witness a small dip on account of profit booking at higher levels till 51,600 50,800. The worries over escalating tensions between the US and China, as well as the ongoing domestic disaster that is Trump's handling of the COVID-19 pandemic, will add pressure on dollar index and keep gold afloat. Overall, our view for gold remains bullish for medium term. Hence, every dip is a buying opportunity in gold. On upside, recent high will act as immediate resistance and consistent trading above 52,750, then doors will be open for 53,600 54,100 top to top trend line as well as 88.2% Fibonacci projection levels. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.